Alright, guys. Today is Sunday, 8:30 p.m. We're gonna be doing what I want to call a market dive, where I'm gonna be just going over what I'll be looking at this week. Just kind of explaining some things, not really going too in depth because I'm not trying to make this video 30 minutes long. Um, so first up, what I like to do is I like to create a new watch list. It's quite easy to create a new one. You just click on this little tab on Thinkorswim or whatever trading platform you're using. Create your watch list. You can also create your watch list on TradingView.com. Just clear it out. You can start making your watch list right here as well. For what I like to do when deciding my watch list for the week is firstly think about what has earnings this week. I like to use Twitter, but you can also use Thinkorswim. It has a lot of features. So, for example, you can go to your watch list tab, down where it says public. Uh, you can find it says upcoming earnings. You just click that, and it has all of the upcoming earnings within for the next 5 days. I believe that's what they do. Tentative earnings for the next 5 days. Scheduled earnings for the next 5 days. That's like just like a little baseline I use, just for picking stocks that have a high volatility. Moving forward, uh, I like to also have a certain amount of stocks that I'm comfortable trading. As you can see on my watch list for this week, I have the SPX, SPY, PLTR, Progressive. This is a company that I've seen earlier, like maybe 2 days ago. H&R Block, Plug, APT, and D-Dog, Datadog. Those are just the ones that I was paying attention to. Well, except this one, this new technology stock. It's a fairly new stock that I've started to look at, but it's trading pretty good according to the indicators that I've used. So I want to give it a try. All right, so let's first start off with what I have already on my watch list. So last week, me and my group, we were trading Datadog. We decided to start trading it, I believe, this day, the 11th. I did some a Fibonacci extension on it, and I drew a regression trend line just to see exactly what was going on. So we bought it on the 11th, I believe, which was a Wednesday. So we bought it on a low right here after it hit the bottom of our regression trend line. As you can see right on, right here we have the open. We basically gapped down from from Tuesday, and we gapped down all the way to the bottom of the regression. This regression is drawn for the dates of 10/14 and 11/14. I extended it while I was trading, but if I were to go off of when I bought it, let me just change that. Change it to Wednesday. Boom. Get the same. Have the same price action. You have the regression getting tackled, and now we have a. Then we have some buyback, and then we start finally trading back into the trend that we were trading for the last couple days. Not couple days. This is like 14 days. I want to go back to the week. 1, 2, 3, 4, 5 weeks. So we've been trading in this sort of trend for 5 weeks straight. This was the first time we broke the trend, and we bounced back to continue. So granted that we bounced back to continue our trend, I assume that we were to at least hit the middle regression. I want to change this color so it's more noticeable. Let me just do it right now. It's right here. Let's make it blue. Let's make it thick because that is an important line. So as you can see, once we hit the bottom of our regression trend on the Datadog chart, we have some buying power. See right here we have the most volume, and since the natural trend is higher price than where we're at right now, since while the volume goes lower, the trend starts to correct. The price starts to correct towards the trend. So right here you can see if we would have a lot of volume, maybe we would trade even lower than this regression line right here. But granted that we have a volume drop off and the stock price wants to start to trade and correct itself to its trend, it will naturally push up. So once we start to push up on above our regression, now we start to trade into it. We get small volume. It's not that much to notice because this is only the 20-minute chart, but it just solidifies the decision because we started to buy in around here. So basically, we bought in the bottom. So we move in forward, and honestly, we should have sold on Tuesday, but we didn't. We bought $90 contracts until next week, which will be expiring this Friday, which would be if I had enough extension, would be down here, over here. So that's Datadog for right now. Right now, we're just honestly just looking and and taking keynotes of the ma- majority resistance support. For example, that will be the top limit, the bottom limit, and the middle limit. Those are the what to say the strongest pivot points. Uh, so this is the 20-minute chart. Let me just show you guys the daily chart. Okay. So daily chart, we have an inside bar of the two green our last 2 days. We have a we have this gap down right here to signify that we should push to fill the gap. We haven't filled the gap entirely yet from the one bullish day, and then we traded inside. So to be honest, it's showing me bullish sentiment. Uh, Moving onward, let's go to APT. I'll probably just do only these stocks because there's actually a lot more explaining than I thought. So APT, I haven't really charted anything. It's something I was looking at price action wise. I started looking at it after the gap down because I have a scanner to tell me gap downs. I think those are important because I like to trade to fill the gap. Okay, so we see a gap down right here, and the gap hasn't been filled entirely yet. The gap's right here. This is where this is our low. So the gap down. Well, the gap should fill around 1473. In my experience, it feels about like I want to say 64%, like 70% of the gap. So if it doesn't fill the gap entirely, it probably fills. If I was to guesstimate, maybe 1460, 1460, like maybe 1450 something. All right, so that's important to note. Another thing that's important to note is this yellow line right here. This yellow line is my 200 SMA. 200 SMA is basically the 200 200-day average price. So what that basically signifies is a long-term sentiment of the stock price. If the stock is trading above the 200 SMA, generally the stock price is easier going up. If it's trading under, it's generally easier going down, as in it's weaker in sentiment for the bullish side. If we were to be under the 200 SMA, the reason behind that is because of the 200 average price. The average price within the last 200 days. Okay. So moving forward to the charting, first we have to let's auto zoom and see the grand scheme of things. Now we could chart from the beginning of the whole price from IPO 3.2 to the high of 41.56, and then we go to our now newest low, which will probably be is actually right next to it's during a Corona crash. But we don't want to trade that. The reason why we don't want to trade that is because it's a large range of price movement. This right here, $3 to $41 is like 39, $38 of a price gap. If we draw Fibonacci extensions for that, our Fibonacci extensions, while they will be correct in the most part, for the most part, it'll show very large movements that we really can't trade in a day trading manner. Those are more of a like a leap. A leap is basically when you buy an option and you hold it for an extended period of time. What I would say was 3 months or more. So, with that being said, and that we're planning to day trade this. I want to start from when the price is not so volatile. Now, if I were just to eyeball it, it would look like it would start like the price stopped being so crazy around right here around June. June 5th will be this, I guess, the lowest actually comparative to right here. And then if I were to look at the rest of the chart, this would be my high, and then my next low would be when we gap down under the 200 SMA. So I'm gonna draw a bottom top bottom Fibonacci extension. Oh, that's a circle. hmm Okay, so you're gonna click on your drawing tools. You're gonna click and it says right here, it's Fibonacci extension. We're gonna do bottom, top, and bottom. All right, hmm, so we're gonna zoom in and you see how what auto range. I never did that before. Weird. Okay. All right. Anyways, so we drew our Fibonacci extension, bottom top bottom, and we see on a daily how it generally follows our trend that we drew. Um, I like to do this just to make sure. Let me just check the time. 13 minutes. Okay. I like to make sure that our Fibonacci extension is trading toward to the chart because obviously you don't want to use an indicator that's not like adjusted to the chart. So if it's not really adjusted, what I do is just check out another technique. Say for example, this didn't work right, and it looked kind of funky. What I would do normally is just remove drawing. I would reevaluate my when I first looked at it, I said let me eyeball it. I'll reevaluate that. So maybe I would zoom in, maybe do 4 hours because I want to get a different type of Fibonacci extension that is more favorable in trading alongside the chart. So right here, I see I eyeballed June again for some reason, but I remember that June didn't work for me, so I don't go right there. So now here's when you could take other Fibonacci extension methods, like for example, like obviously I haven't taught this yet, but a Fibonacci extension can be bottom top bottom, ABC pattern, and that generally yields bullish sentiment, or it could be like D, E, F, DEF, which is top bottom top, which indicates a bearish sentiment because it's a double top. The the other one, the first one will be double bottom. It's just a technical term that will be explained in a later time. It's just basically when the stock price hits support, like a strong support twice, and then most, like the majority shareholders decide that it's time to buy again. Like let's average down and like solidify a position. That's a double bottom. Double top is when the resistance is hit more than once, and shareholders are deciding that they want to start to take profit because major resistance was hit not only one time but two times. And you don't want to be the sad person that got smoked at the third time. But anyways, I drew my let me go back. I drew my top bottom top. I zoom in and I look at it, top bottom top, and it trades pretty decently with it as well. So you could literally use whichever Fibonacci extension that you would like to use. The reason why you can use either one is because of the settings that I've imposed on my Thinkorswim. Whenever I do a top bottom top, which is a double top, which will yield me a bearish sentiment, like right here. This is bearish. See my Fibonacci extensions. Uh, it gets to 100% as we go lower. But even though your Fibonacci extension pattern might be DEF, the the stock itself can still show some bullish sentiment. Right now, since we had the double bottom and we gapped down, I mean not the double bottom, since we gapped down and and for the next few days we started to trade higher, that signified that the gap wants to fill. So despite the Fibonacci extension being bearish, the gap wants to fill. So that's why I put these two negative extensions in place. You can easily just do it yourself by doing edit properties. Once you have edit properties, you see visible coefficient, color, blah blah blah. You can see my negative coefficients simply by the color. This is the red. You can just you just take the 10% right here. You can take the 10%, and then you take the 23.6. With Thinkorswim, it really helps you. All you have to do for these percentages is nothing really like rocket science. You literally just it's literally a decimal. It's like 25. This would be 25%. You multiply this by 100. That's your percentage. You multiply this by 100. That's your percentage, and so on and so forth. I just kept it at 23.6. This is because that's the default, and I felt more comfortable with it from the beginning, and I just never changed it. I did, however, make make the 10% customized because I feel like a negative extension is a little much personally. All right. So moving forward, after we drew our Fibonacci extension, on the daily or 4 hour, whichever one you wanted to do, whichever one felt comfortable for you. Cause I feel like I should mention this because I do say things like whichever feel comfortable for you, and you want to learn how to do it, right? The reason why I'm saying whichever feel comfortable for you because while trading can be a science, is generally subjective. As in, like, what do you see? Um, what's going on to you? Because something can make sense to me, and it won't make sense to you. And I could say, oh, it's a good time to buy it right here, but you don't think so. You just simply won't think so. So that's why I say it's whichever is comfortable for you. Because at the end of the day, I'm not the person that's buying your stuff. You're the person that's buying your stuff. So it's something that you gotta get comfortable with. When I explain things, I'm explaining them so you will be comfortable with it and knowing why something's going on, so you can have a better judgment on deciding if you want to buy something or not. And that's why I showed you the two methods with the Fibonacci extensions. If you drew the first one and you didn't like the way it was looking, you draw another one and see if you like the way that one's looking. It's generally going to show you the same things because the Fibonacci sequence is a science. Like that is, it's just what it is. It's just it's the relation between the price movement and date and time, speculation and all that stuff. It's like it's a lot of factors, and they all generally yield the same result when you draw a Fibonacci extension. Like if I were to draw one from the beginning of the IPO to the end, to like I guess right here top, because it would be bottom, top, and then I would draw another bottom. I will more than likely get something close to this. Like that's just because it's science. Let's see, test it out. And you see right here, my 61% is the same as the 0%. My 23% is the same as my 10%. And that's why I was trying to explain earlier when I said I wouldn't draw my Fibonacci extensions from the beginning of the chart because, like I said, it will yield some useful information, but this information is for more like a swing trading, leap trading, where like you're holding something for an extended period of time. All right, so this has been a long time. I'm gonna do one more chart, then I'm done. Um, let's do plug because I like plug. That's my shit, and I feel like this would be pretty good for explaining Bollinger Bands. Bollinger Bands are uh, it's an indicator that I use for deciding in like a quick glance on things. Like if I want to even look at the stock or or even like pay attention to it. The reason why I have these in motion is because since I day trade usually, I use things like scanners. And when you use a scanner, you have to look at things. You have to look at things quickly. You remember when I was talking about the scheduled earnings for the next 5 days, right? Now, when I'm using my the Bollinger Bands and deciding if I want to look deeper into it, I first take notice of these two things. This is our upper limit and this is our bottom limit. I colored it that way. I don't know why I did that. Colored it that way. I just colored it that way just because it was just that. I don't know. Anyways, though, this doesn't matter because you can color it any way you want. The higher limit is obviously resistance. This lower is support. So for you guys, purple support, red resistance. Our middle band, I'm not really taking into consideration all that much because I'm just trying to figure out if I want to deep dive into certain stocks. So if the first thing you should notice when looking at Bollinger Bands is once the stock starts to trade at its resistance or at its support, it's very likely that it will start to trade within the Bollinger Bands, like it will retract or pop up. For example, right here we traded above our Bollinger Band for one day, and then I guess you could say 3 days in total. Now, right here, I would be thinking about going being bearish. The reason why I'll be thinking about being bearish is, like I said, oops, zoomed in. I thought I made a circle. Okay, all right, yeah. Like I said, we have extension over the Bollinger Bands. We actually have an extension over one day. So 1 day, 2 day, 3 day, 4 day. So we have extension over for almost a week. If I were to see that, I would start to be bearish. I would start to be bearish because of the previous criteria that I said before. Once the stock starts to trade above the heavy resistance or the upper Bollinger Band, we're more likely going to see some bearish activity, some selling. And same for the vice versa. For example, when we go to the support right here, you can see that we didn't really trade under support, but we hit the support and we hit it 3 times. 1, 2, 3. even on the second day, I would start to be bullish. I would start to be bullish because the second day we didn't start to trade under it. We're more than likely gonna start to. We're not gonna break our trend. We're not gonna break the Bollinger Band like we did up here. So I would start to be bullish. And generally, if you just decide to trade on that signal, right? Say you see this, and you say I'm gonna be bearish. You just, if you're bearish this day, it's fine because you started making money this day. Just as long as you made sure that you were confident in your decision and was thinking clearly and not with so much emotion, because this is how people lose money. This is the correct play. You sell, you start to sell. You say we're trading above our Bollinger Band. That's weird. Let's start to sell. It goes up and it stays up, but it only stays up for 1 week. If you're buying, if you're buying off of the daily chart, you're looking to swing. Like I said in the previous chart, when we're looking at the daily chart, we're looking to swing. That's why we zoom in and do like smaller time frame indicators for day trades. But let's say on this example that we're just trading this Bollinger Band on a daily chart. We buy put on this day because we start trading over our Bollinger Band, and we don't sell until we start making money because we're smart. And we start making money this day, and that's it. We're done. We could literally be done like that. You don't have to draw no other indicators or anything like that. You could trade like that and it'll be fine. But I want to teach people how to be even like how to gain a certain comfortability with trading, where they don't feel like this wouldn't worry them. Like that's the goal. You can see later on when we hit the support that we bounced up, and then following later on we hit this resistance, we go down. Following we hit this support, we go down, and then following we hit this we hit in this resistance, we go down, and now we're gonna see what's going on. More than likely, judging by how the stock has been behaving since was this August, it's more than likely gonna go down. But we can go even deeper into this. We can zoom in. I'm just charting this. I wasn't a chart plug, but I'm gonna chart plug because I'm trading that this week, so I'm gonna might as well do it. Okay. So with plug, it's a little different right here. Like, how should I say? Since this stock is newer, it has a IPO, and it just came out like an IPO this year, and it's had its first earnings. And I remember it had its first earnings. It had its first earnings February. And it has beat its earnings every time, right? So this stock is more of a this stock is more of a speculative stock until it gets a little bit more traction. So that's why when we trade over our Bollinger Bands, we have a red day, but we haven't really, we can't really see much. See it with we was looking at Intel before. Intel's very has like longevity, long. I say that word longevity. All right. So it's a little bit easy to see, but you literally will see the same things as long as you zoom in. Since this has less of attraction, you just have to zoom in to see the same things. For example, right here, you see we hit the top Bollinger Band. We go under and we don't hit the support, but we still have that same sort of price movement. We hit our Bollinger Band, and we start to trade lower. We hit our Bollinger Band, and right here we just had a bullish flag. Plug is crazy, and this is why you should learn other indicators. Because now this is looking crazy, right? Because look, right here, let's see, show you right now. We have right here Bollinger Band. We start to trade lower. We have this Bollinger Band right here. Oh my gosh. We have this, but we don't trade lower. So you buy this, you're still losing money. Unlucky. You bought, you buy this, you make money because you know you make money later on. But you see the inconsistency with the Bollinger Bands on plug. All right, you see it right here. Consistent, inconsistent, consistent, inconsistent, consistent. It's kind of funny. That's why I draw Fibonacci extensions, and I also use regression trend. And now is the perfect time to show you why that's important, because this is looking crazy. So Bollinger Band, you use it very very well with daily chart. You can use it with your minute, with your 30 minute, but it's generally just for um, general market direction. Right here, these three. You see this? You see it starts to trade over here. You can say, all right, we're gonna be bearish. We're gonna start to be bearish. We have to. It has to start to trade and correct itself, or you're gonna get a situation like this. And I'm seriously thinking plug is gonna get smacked like bad, like down here. Like it's gonna get ridiculously thrown around, bad too. It didn't even like it didn't even be earnest like it was like a lot of people projected it to be. Like it did beat about like 11%, but like that's nothing compared to how much volume it has had recently. But that's other stuff. That's completely new, like completely what you say, fundamental type of knowledge that you don't really know yet until you get familiar with trading stocks. All right, but yeah, let me draw my regression trend so I can show you why it matters. So I want to draw the reason I'm gonna draw one up to the final day. So activate. So we're gonna start on the last day we had a red bar, and we're gonna do it all the way until present day. Whew, excuse me. The reason why we started at our bottom is because we want to trace this trend. We want to follow it. We want to we want to see what's going on. And the reason why we want to do that is because we want to see when there's decent times to buy while this stock is trading with this trend. Now, if we were to look at the daily, let's see how long this trend is. This trend has been from 10:30. That would mean this trend is 2 weeks long. Now, I mean, I trust 2 week long trends. I don't know. It's up to you, really. Do you trust it? How much do you trust it? Will you trade it? But all right, let's get back to it. So we have our regression trend line, and another thing I like to draw is the Fibonacci extension. So for my Fibonacci extension, however, I want to do I want to look at the hourly. I don't have an hourly chart right here, so I'll just add it. I'll explain to you why I want to look at the hourly in just one moment. Apply hourly. Wow, I messed that up. Hmm. So I messed that up when I put edit and I put 1 day time interval. I want to do 90-day time interval. And here we go. Now the reason why I wanted to do like a 90-day time interval is because, like I said, our regression trend is 14 days. It's 14 days long. If I really wanted to, I could make it. I could put it at the bottom. Yeah, alright, put it at the bottom. Yes. Now it's 15 days. What is this? That's weird. It made another one. Alright, alright. So the reason why oh, the reason why I want to do 90 days is because I want to see more of the chart. I want to get since I already drew my since I drew a regression trend for the 14 days. I already have my small time frame indicator. Like right now, I could draw a Fibonacci extension that's a little bit more relaxed. It doesn't have to be as so exact as our data dog indicator or our APT where we didn't draw a regression. We were gonna simply trade off of the Fibonacci extension. Right here, since our first indicator isn't consistent, the regression trend, it's not that out it's not that it's not consistent. It's a trend. Trends break easily. Trends can break easily. All it takes is one major shareholder with 1 million shares to say I don't want to have this stock anymore, and that trend is gonna get smoked. So I like to have a backup, and my backup will be drawing Fibonacci extension. I'll probably draw a Fibonacci extension, maybe for a bottom top bottom, like bottom here, top over here, bottom over here, again, and really see what's going on. Or I could do something a little bit closer time frame right here, like September bottom, and then hit up the top one September. Like this is maybe at beginning of October in September, and then we have our next bottom, which would be mid October. I might want to do that because it sounds like it has more consistent time frame between the points. I want to say, I'm guessing right now, but maybe 10 days. Let's see what it looks like. Let's draw it out. All right, let's see. So for this example in particular, what I would probably do is edit properties, add curve. Alright, so we adding curve, and I want to add like maybe 150. Alright, so let me see, because I forgot how to do this, to be honest. I'm pretty sure. Yeah, hold up. This is hard. This is some hard shit. Alright, I got it now. Edit. Copy, paste, and then what I want to do is add 2.68. So since I'm lazy and I don't know how to do math, 6 point this. So that should add another blue curve above, and it didn't. And I don't know where it's at. My blue curve. Unfortunately, I don't really want to fuck with this right now like that. Anyways, what I envisioned was to add an extension over here, maybe 115% would be right here, just to see how well it's trading with my Fibonacci extension. Right now, though, this is not something I will buy and be bullish with. The reason why I want to be bullish with it is because it is trading way above my 100% Fibonacci extension. Um, while my data ranges are pretty decent. Let's see, 924, 1030, 1008. I want to change this. 10, let's make it 1010. That didn't do nothing. Anyways, our data ranges is pretty well though. So I would just, to be honest, for this week, I'm gonna be bearish on plug. I was gonna be bearish on plug for other reasons. Remember how I was saying how this is extended very high, and we never filled this gap down here. So that's why I'm be bearish. But I'm also gonna be bearish because now that I drew the Fibonacci extension, we're trading way above it. We're trading way above it. This is not a good idea. We have our Bollinger Band. We get touched, and then we have this will be, I guess I like to call this a softer limit. This dotted line is pretty faded. Um, that the price didn't care about that, but we have a touch of the resistance right here. We go down, but we gap up the next day, and we have this top, and we start to go down. We gap down. We touch our lower Bollinger Band and the lower end of our regression trend, So I mean, it may be bullish on the short term, but like I said, I think it's gonna be bearish on the longer term because of the factors I said previously. With that being said, I've been talking a lot, and this video is long, so I'm gonna end it. Um, Thank you for coming and watching. If you have any tips for me, I know I talk really fast, and I do not be knowing what I'm be like want to say sometimes. So I know I have to work on that. But other than that, let me know if the explanation is suffice. Is it enough? Is it not deep enough? Like what else would you like to know? I know I planned on doing a couple charts and really showing how I find the stocks to look at, but explaining charts was a lot longer than I thought. I wanted to really explain it well enough for you guys to understand and do it yourself without me, and maybe even look at other charts and say, "Oh, I remember what this Bollinger Band does," or maybe I could draw a regression trend for on this one, or I wonder what the Fibonacci extensions would look like for this. It's like what I really want you guys to take away from the video, like doing the things on your own and being comfortable with why you're doing it. So, if you do have any tips, please let me know. And as always, keep it easy, stay breezy.